Michael, good having you. Thanks so much for joining in. In India, definitely, and arguably across a lot of emerging markets, the fund flow situation in the month of October seems to have reversed. Maybe the compulsory redemptions are over and maybe that's why there's some bottom fishing happening. How are you reading the situation?
To be honest with you, I think it's a combination of greed and short-term memory loss. Because I think all the fundamentals that had everybody worried up until recently are still there for nearly every major market. Now, India is an outlier. I do think things in India are looking positive because commodity prices are so low, and I've been saying that publicly. But almost everywhere else, it's still a wall of worry in front of us, and I cannot understand why people are trying to pick up pennies in front of a steamroller.
Michael, I want to talk about the Chinese data which was released in the previous trading session showing that clearly the economy is slowing, but it still seems to be avoiding hard landing. How are people on the street reading into the Chinese GDP data and what's the expectation going forward?
People don't believe the Chinese GDP data. That's the simple matter of fact. The headline number was, of course, better than expectations because China seems to have a duty to always release GDP numbers that beat expectations, similar to Wall Street quarterly earnings. But actually, when you look below the headline and actually look at the detail, it simply doesn't add up. We know that there's weakness in the industrial sector, and yes, we saw that, but we had phenomenal strength in the services sector in the same quarter that saw the renminbi devaluation and market panic and the collapse in the stock market. So really, the numbers just simply do not add up overall, and I don't believe we actually saw 6.9% growth in the quarter at all.
About 6-8 weeks ago, everyone was nervous about the underlying global economic growth. Enough and more reports were written on how China will be the center of volatility and emerging markets could see a structural and a cyclical pain. But the recovery in emerging markets, and emerging market flows in the month of October has been quite extraordinary.
Yeah, and I don't buy it at all. I thought I made that quite clear a moment ago. The fundamentals that were worrying before are still there, front and center if you look for them. All we have is a new quarter starting, maybe new optimism, and as I said, potentially greed and short-term memory loss, because actually the situation hasn't changed on an underlying basis. All that volatility is still lying there in the background. Now, it may not come back this month, it may not come back in November, it may not even come back in December, but I think 2016 looks to be an extremely rocky road for emerging markets.
Could be the turning point which could inject volatility back into the system?
Well, you have many. First of all, the Fed could raise interest rates. They could do that as soon as December. It's unlikely, but they still could. At the same time, there is pressure for the Chinese to devalue their currency. Of course, they say that's not going to happen. Everybody always does until it happens. At the same time, either Europe or Japan could introduce a new phase of QE. That seems extremely likely in Europe and also highly likely in Japan. Any one of those things, and obviously more than one of those things happening together, are going to cause extreme volatility, and emerging markets are not going to be able to escape that.
Michael, final question from my end at least. I heard you mention in your initial chat that India seems to be an outlier even if there are macro concerns across. What's the base stance on India from an equity market perspective?
Well, I think equity markets look rich in India, to be honest, but as I've repeated several times recently in different fora, if you can manage to at least hold on to where you are now, relatively, you'll be outperforming. Or even if you decline a little bit and everyone else goes down 15 or 20%, again, that's a relative outperformance. I do think the fundamentals in India get better and better the lower and lower commodity prices get. We can all agree with that. But at the same time, valuations still look pretty rich to me, and therefore I think just trying to preserve capital is a pretty good starting base looking forward.
Michael, so good chatting with you. Thanks much for taking the time out and speaking with us today.
Thank you.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.